for starting your week with us. Hello and welcome to Business Daily. I'm Lee Ji-yoon in Seoul. We have plenty on our plate today, so let's get started with a glimpse of the day's highlights. With Korea's consumer sentiment down to levels not seen since the 2008 global financial crisis, consumers are tightening their belts, cutting back even on basic foods. Online sales on Black Friday surpassed $3 billion, but combined with brick-and-mortar stores, consumers spent $10 less on average. These stories and more coming right up. Political instability continues to roil the nation, all at a time when fresh economic indicators spell greater trouble on the economic front. And the latest report shows that consumers are cutting back on spending, including on food. Our Eunice Kim starts us off.
At posh department stores, the deep discounts of Black Friday and buy one get one free promotions have not been enough to thaw a frozen consumer sentiment. In fact, a fresh Statistics Korea report on spending in the third quarter shows a worsening trend. Koreans' average propensity to consume came in at 71.5%, the lowest level since last year, meaning 28.5% was set aside for saving. Factoring in inflation, real consumption expenditure comes to a cutback of 0.1%, a third consecutive quarter of declines. Consumers are reacting to a triple threat of shrinking paychecks, economic and political uncertainties. They've become so real that Koreans are even cutting back on food. Average grocery expenditures in the July through September period, excluding alcoholic drinks, actually shrank 5%. Spending on vegetables plummeted 17%, as spending on grains also fell nearly 8%. Furthermore, spending on health, telecommunications, and clothing and shoes were all cut on year in the third quarter. And the list continues. People were closing their wallets on buying things like coffee, tea, alcoholic drinks, and cigarettes. The biggest concern is what's ahead. With the Consumer Sentiment Index and Economic Outlook Index dropping to levels seen during the 2009 financial crisis, coupled with a still bloating household debt load, a strategy to shift gears and effect change looks to be urgent. Eunice Kim, Business Daily.
The government has vowed to maintain financial market stability amid growing concerns of an upward trend in interest rates. This is according to Financial Services Commission head Im Jong-yong, who spoke at a financial reform meeting on Monday. There, Im warned that the global financial market may see stronger volatility as the incoming Trump administration expands on its economic policy plans. He said the commission will take firm stabilization measures if necessary. In terms of the country's massive household debt load, Im said the commission will draw up measures to enhance protection of loan defaulters and expand financial assistance for vulnerable groups as conditions may deteriorate under higher rates. And moving on to markets, to talk more about market trends and what to look forward to this week, we have SCB economist Kathleen Oh joining us on the phone today. Hello, Kathleen.
Hello.
All right, so to start off, how did the Korean stock market do on this Monday?
Hi, yes. Kospi closed today at 1978.13 points, rising 0.19% from last Friday, up 0.6% from a week ago. We saw some regaining of capital flow from last week that has reversed since the U.S. election, which triggered massive outflow. Today, local institutions sold over 203 billion Korean won in Kospi. However, foreigners bought 208 billion Korean won. We're seeing some market correction without any fresh developments to trigger this turn. To us, it feels like the position reduction of the U.S. assets as the U.S. yields rally is losing steam. I'm looking ahead this week. Major data may re-inspire assets back to the U.S. and Kospi may see some further volatility. By sector, however, a recovery shown in the Q4 economic data is likely to recover some sentiment, and also sector performance if they are proven solid, may compensate for the losses on a gradual pace, in my view.
Now, the prosecution has summoned chiefs of the country's top conglomerates to question them about their ties to President Park's confidant Choi Soon-sil. So how have the markets been performing and what kind of impact has the investigation had so far?
This is a difficult time for South Korea's equity market. External factors are extremely unfavorable to emerging market assets. After the U.S. election, capital outflows from Korea as well as other emerging countries are accelerating. More on Korea's current political situation further worsens investor sentiment, largely due to political uncertainties and the top corporates' involvement in the investigation. The large cable companies' involvement in the political scandal appears to lead investors to turn skeptical on Korean companies' corporate governance and its transparency issue, which are both very important to equity investors. We expect to see some equity outflow to continue, not only from Korea, but also from across the emerging universe. But think Korea's stock market will face higher volatility due to the political uncertainties. Upcoming Q4 GDP and corporate performance will be key to recovering confidence, in my view.
And of course, the U.S. stock markets closed early for Thanksgiving after a continual rally on dollar strength. So what are your expectations for the foreign exchange market?
Yes, Donald Trump's election as U.S. president has set off a major reversal of previous FX market conditions. The U.S. dollar has surged over 5% within the last 3 weeks. The increase in FX volatility threatens emerging currencies facing accelerated depreciation. Korean won has weakened nearly 4%, largely among emerging market currencies against U.S. dollar. We continue to stay bullish on the U.S. dollar this week and expect strong dollar against both G10 and emerging market currencies. We expect U.S. dollar to particularly strengthen against the euro and the Japanese yen, as well as Korean won. This week, we think 1180 will be tested and expect Korean won to hit 1195 by early next year.
Now then, what are some of the important market events lined up for this week? Because it looks like we have a lot of data to watch.
Yes, this week a number of major global events and domestic data will affect markets. First, OPEC meets on Wednesday. Whether OPEC agrees on a production cap will be the key focus. Also, China is scheduled to release official PMI for November this Thursday, which is expected to retreat from a 2-year high in October. In the U.S., all eyes will be on the November payrolls on Friday. However, it is not expected to affect the Fed's rate hike expectation for December. Domestically, we have October industrial production, November CPI inflation, and trade data. All three will be key to show the latest domestic economic condition. We expect some recovery across data points. We think industrial production and inflation picked up, as well as exports to have turned around to a positive growth.
So with crude oil prices having climbed last week, what are market expectations on the upcoming OPEC meeting?
Yes, global oil prices have recovered past week, having so far been unable to agree on capping production. We expect consensus to be reached in Vienna this week. The key will be whether Iran will commit to freeze in return for facilitating cuts from other OPEC members. Currently, the market believes that the prospects appear positive for a deal within OPEC. However, some insufficient involvement from Russia may still cause some deals to collapse. This has been Kathleen No for Business Daily.
All right, thank you, Kathleen, for that. State-run institutions are set to offer nearly 20,000 new jobs next year. Based on data from 321 public agencies, the Finance Ministry said roughly 19,800 positions will be offered in the coming year, which is about 1,300 more than this year. Hiring at public institutions has been on the rise since 2013. Now, in terms of companies, Korea Electric Power Corporation is set to hire the most, by more than 1,270 people, followed by Korea Hydro and Nuclear Power and the National Health Insurance Service. A new report shows that Koreans in their 20s and 30s would need to save for more than 12 years without spending anything to have enough money to buy an apartment here in Seoul. According to Statistics Korea, the average disposable income for households, led by those aged 39 or below, is slightly over $3,000 a month, while the average price of an apartment in the Korean capital was around $470,000 in September. Now, by dividing the average price with the average disposable income, it would take younger Koreans 12 and a half years to buy a place here in Seoul. But now, including expenditures, that time frame would expand to nearly 4 decades. So the national shopping bonanza over in the United States, known as Black Friday, has come and gone. And this year, numbers show that more shoppers stayed inside the comfort of their own homes to shop than ever before. Our Lee Min-young has this report.
Black Friday was a big hit again this year, but not in the usual way. More than 150 bargain-hungry consumers took advantage of the deep discounts offered over Thanksgiving weekend. What's notable this year is that the majority of shoppers stayed home and did their bargain hunting online. According to computer software company Adobe, the revenue generated from online sales on Friday was roughly $3.34 billion, which is up more than 21% from last year. It's the first time the figure has surpassed $3 billion. Mobile sales also reached an all-time high of $1.2 billion on Black Friday, a 33% surge from last year. On the other hand, data from researcher Shopper Track show that the number of consumers visiting physical stores over the 2 days fell 1% from a year earlier. Meanwhile, a survey by the National Retail Federation shows that there were more shoppers this year overall, but they spent less. 3 million more people shopped at both brick-and-mortar stores and online during the holiday this year than last, but they spent about $10 less on average. The Federation attributes this to the fact that more stores participated in Black Friday events this year, and they offered larger discounts than last year. In addition, 36% of shoppers said everything they bought this year was on sale, a nearly 4% increase from last year. Lee Min-young, Business Daily.
There's been an endless stream of new products flooding convenience stores every month, with a substantial number of them being the fruit of collaboration between retailers and food manufacturers. Our Lee Joo-young has more on this new trend.
Collaboration products have emerged as the latest trend at convenience stores as retailers and manufacturers join hands to develop new products.
I find a lot of collaboration products very cute and interesting. I tend to buy a lot of those products.
They taste better than I thought, and they're fun to eat. I try them out with my friends and recommend them when there's something new and fun.
One example is this kokkalkon jelly, modeled after the classic Korean cone-shaped corn snack, kokkalkon. Made by GS Retail and snack maker Lotte Confectionery, the jelly candy is sold exclusively at GS convenience stores and supermarkets and ranks within the top 3 most popular gummy snacks.
The jelly candy market has always seen strong growth, and while looking for a mega brand, I decided to go with kokkalkon because there's never been a corn-flavored jelly candy before. I thought that, on top of creating a new flavor, if I could collaborate with a steady seller, it would be a hit.
GS says its many other collaboration products, which takes up roughly 20 to 30% of shelf space, have largely contributed to pushing up sales by roughly 23% in the first half of this year compared to the same time last year. The popularity is said to be driven by people's insatiable appetite for new tastes and trends. Along with GS, other convenience stores have also been making similar attempts. 7-Eleven sold 200,000 cups of its Dongwon tuna ramen, a fusion of Dongwon's canned tuna and Palto's cup noodles, in just 5 days. CU has also seen substantial success with many of its new products. But creating such success is a long process, with many producers going through at least half a year of trial and error.
It takes a long time because there are a lot of technical difficulties. We exchange samples at least 10 times. It's a constant process of requesting a flavor and then enhancing it.
From these character bottled beverage products to potato chips that come in all sorts of flavors, there are endless possibilities for the next hit product. And it's this potential that retailers are banking on to attract hungry customers. Lee Ju-young, Business Daily.
And that wraps it up for today. Thanks so much for watching, and we'll be back tomorrow with more business news that matters to you. Until then, goodbye.